We have Jensen Huang saying, hey, this is sustainable, justified. You just trimmed Nvidia. Why?
More risk management than anything else. Nvidia, for the last, I can't remember the exact date you just had on the board, but I think it was Monday it tracks back to. The last few days, it's been trading right back up close to its all-time high of about 202. And to me, this looks like a good place to be doing some risk management and taking some profits, because at some point, the GPU and the TPU become indistinguishable from each other as far as their capabilities. At some point, that's really good for Broadcom. It's really good for Google. It's not as good for Nvidia. And so to me, it's not a matter of I don't like the company anymore. I think they'll find the next wave of innovation and get there too. But it looks like a great place to be taking some profits and just spreading those dollars across other opportunities among this SaaS apocalypse that's happening right now, creating much better looking opportunities.
SaaS apocalypse. It has been. It really has been that. Right. Which plays into another move of yours, which I'm going to sort of leave as a cliffhanger for a moment. I thought there was an interesting note. If you think about what's happened with software, we'll just show you the IGV, which tracks it, obviously. And it's so many of these stocks have gotten hammered. Now, some are responding this week in a bounce back, but the longer trend has been ugly, to say the least. How about, there's a note today that says it would probably be helpful if software execs bought some of their own stock as a show of good faith in the business model. However, there has not been, according to this source, a single executive-level insider open market purchase of software stocks in the past 2 weeks. Yeah. Not one. That's interesting.
Yeah, and I think that speaks to the amount of SBC there is in this sector, perhaps more so than any other sector of the economy. The executives own stock in these companies for pennies per share. It's very hard to get them to see an opportunity has been created. Stock price falls from $350 a share to $310. Yes, percentage-wise, it's a decent-sized sell-off, but they own the stock for 40 cents. So you're probably only going to see token buys, if you see any. And I would just point out, let's not act like software stocks haven't been market leaders for 15 years. They have outpaced almost any other sector you could think of. And throughout the entirety of that rally, and we're talking about compounding at 25% a year for 15 years, nobody's been buying. So I don't know that that's a necessary ingredient, but I would agree with that note, because if you're a retail shareholder, and you don't understand these things, seeing these guys continue to sell on their plans that are planned in advance, could we at least put a freeze on some of the pre-programmed selling? Even if we're not buying, can we stop selling? That's a little insane.
Well, we do have a little bit of buying, at least here in our own little orbit. You bought more ServiceNow, Malcolm. So that stock year to date's down 34%. Week to date, while others have bounced, it has not. It has not.
Yeah.
So why are you buying more now?
So I'm glad that I stayed disciplined on this one and have been averaging my way into it. I've been catching the falling knife, as we all say. So I started buying. I called it peak pessimism on this name when it fell all the way to 150. Then it fell to 125. I bought some more. Now it's fallen to 100 basically, and I just bought again. And I think that what's being missed right here, most software companies tend to be unprofitable, and we tend to value them based on just a multiple of their revenues, multiple of their sales. In this case, ServiceNow actually has growing revenues, 20% or so from their last earnings. They've got growing free cash flow above 30%. There's an actual business here which is being extremely discounted, and so I'm buying it on the premise that all of the good that's baked in there, all the moves into AI, the acquisitions they've made, everything else will eventually start to show itself as value creation and not so much taken away as the street seems to be discounting.
We've also been telling you every day about the roll-on effect of the pullback in software hitting different areas than just pure play software. It's private credit. They've been hit over the last month. There now has been the brokers over the last few days. Altruist, right? They came out with a new tool, and next thing you know, you've got all these financial services stocks: LPL, Ameriprise, Charles Schwab, Raymond James, and Stifel, and others getting hit pretty hard. We bring it up yet again today because, Josh Brown, you know these guys well. so much so that you have partnered with them on various parts of your businesses.
Yes, I'm a shareholder in Altruist, full disclosure, and I'm an advisor to the company as well, and we're a customer. So we use all of the major custodians to, when our clients send us money, that's where their money is held at the custodian, and then the custodian often provides technology tools. And what Altruist announced is pretty amazing. It's a feature of their in-house AI, which is called Hazel, that goes into tax mode. And literally, my advisors and the CFPs who work at my firm can feed our clients tax-related information into this ecosystem that, of course, is very heavily protected, and get insights directly from Hazel telling us exactly what their situation is. And if you don't know much about tax work, I can just tell you they are saving people like weeks and months worth of time when they're dealing with high net worth families, business owners. So it spooked LPL, it spooked Schwab, it spooked Raymond James. Maybe it's not completely unfounded. I do think that those reactions were overreactions, because we will see this type of technology available in many places. Altruist just happens to be a pioneer, and they're very early to a lot of the tech trends. And I think maybe some of those moves are overdone, but the importance of what they launched and what other firms are launching, AI tools for advisors, should not be overlooked. They absolutely are going to change the economics of the wealth management industry.
So can I go out on a bit of a limb and say it is overblown? So when we see the sell-off that's happening in the insurance companies because of a piece of Claude code, when we see the sell-off in the real estate servicers now, Jones Lang LaSalle's down like 12% today because of a Claude tool. Like all of these different companies selling off 10+% because a piece of code suddenly when is it going to be adopted by the companies? With Claude's co-work, it's got to be able to take over your entire machine and log in as you with your credentials.
Do you think
how long before you're willing to allow that in your company?
Do you think the sellers, I don't know the answer to this. Nobody will admit that they're selling. Is the first. I got calls all over Wall Street. I talked to asset managers. Nobody's like, yeah, I'm selling, but somebody is.
Everybody.
What do you guys think the sellers are thinking? Are they thinking this is real disruption? These companies are screwed. I got to get out now, or are they playing chess and saying it doesn't matter if I think this is overblown? I can't have a stock down 20% in the next month because enough other people think. I think it's the latter, where people are just like, well, everyone else is scared, so let me sell first. But I'd love to hear what you guys think.
By the way, don't even look at a stock like Microsoft. I don't think we focus on it enough individually in the residual impact of Anthropic and the things that they've come out with recently, Claude for Work, et cetera. Microsoft is down, look at it over a month.
Yeah, they're worried about Copilot. They're worried about Excel. They're worried about
30%.
What do you guys think the sellers are thinking?
The sellers think that they want to get out before the next seller shows up.
So they don't believe it's disruption. They don't believe it's disruption.
Well, they think it might. Sure, it's going to be disruptive, but all of these companies having their business vanish.
There's been a narrative out there for over a year comparing this moment, the circular deals and everything else, to that of 2000. So everyone's been on edge saying, as soon as something looks sketchy, I gotta sell, and I think this is that moment.